everyone, welcome to the September 2013 Asset Management Strategies newsletter. Let's take a look at last month's markets before we talk a little about political issues. As bad as August was, September was the complete reverse. The S&P recovered from being down in August to being up 2.55% for the month of September. Just as the S&P didn't tell the whole story in total market activity in earlier months, it certainly didn't tell the whole story last month, this time much to our advantage. Even though the S&P was up 2.55%, small cap stocks were up 7% in the month and large international stocks were up 7.4%. So our diversification in these other asset classes helped deliver better returns. This helped us catch up some on our year-to-date performance compared to the S&P. As I mentioned last month, we switched back to the weekly software model and did not have any sells when the market was lower in August. This allowed us to stay invested and participate in the good returns in September. On the political front, the government shut down on October 1st, and as of this writing, it is still shut down. I expect this to roll into the larger debate coming up on raising the debt ceiling on October 17th. Any resolution now would only be temporary until that time. While I do believe the government should live within its means by only spending money it actually has or can reasonably pay back, like what you and I do, I do not like to see this type of continued political dysfunction. The most concerning deficit that we face in this country is that of leadership on both sides of the aisle. And that's saying a lot since we have $17 trillion of debt currently. As this chart shows, we don't have a revenue problem, we have a spending problem. In 1902, the United States government had revenue equal to 7% of the gross domestic product and was living within its means. Today, that number is 35%. As incredible as our growth as a productive nation has been, the growth of our government has exceeded it by a multiple of 5 times. Imagine the explosive growth of our economy through the agricultural revolution, then the industrial revolution, and yet the government has grown at 5 times that pace. If you add in the excess spending above our current revenue, the multiple is actually 49%. That's unbelievable, certainly unsustainable. Just ask Greece. Is it responsible to raise the debt limit? Let's look at this in the perspective of a home or a business. If you owned a home worth $300,000 and had a mortgage of $150,000, I would argue that it would be okay to increase the debt to, say, $200,000. But that is certainly not the way that math adds up for our government. We're borrowing $2 for every $3 we spend right now. Our current national debt to total U.S. revenue is 6.3 times. Would you be comfortable having a $1.89 million mortgage on a home only worth $300,000? All that considered, this immediate political drama is but one episode in this ongoing battle. I expect that we will miraculously resolve this in the 11th hour by doing virtually nothing that will make any long-term improvements to spending and the debt levels. Once that happens, the markets can get back to focusing on earnings and economic indicators, which are slowly improving. Once again, much ado about nothing. Long term, however, at some point we can't continue to sweep the issues under the rug and we'll be forced to make changes. When that happens, I don't know, and I want to participate in the markets until that point. But I sleep much better knowing that we have software in place that can help soften the blow when it comes. That's enough ranting for this month. Thanks for listening. Please feel free to email this newsletter to friends and family. Talk with you next month.